Hello everyone, it's none other than your boy Chatmaster here. I welcome you all to Chatmaster FX, and today we are going to look at the ignored accumulation, which is abbreviated as IA. This is one of the soldiers of the jungle strategies, and we are going to go deeper on this standard operating procedure. So as usual, we need to look at the anatomy. Once you depict the anatomy, you can be able to identify the pattern on the charts. Of course, the anatomy may not be the same with what we find on the charts. As you know, guys, that there's much of variability in the movement of price in the market. But however, once you picture something, then it becomes easier for you to identify the setup on the live charts. That's why before I present any standard operating procedure, I start with the anatomy of it, so that guys, you may picture it before going to the live market. So guys, accumulation, as you can see guys, that on this setup we have accumulation that is happening here. As you can see that these orders are being consumed as the price is going down. So by virtue of compression, you know that guys, what we expect from such a market is that if all these orders are consumed, then what we'll be waiting for is for the price to break into compression and come to the beginning of compression here. Then the price do whatever it does once it has covered the compression zone. But in this case, you see that once you see that there's compression that is happening, this is what may happen to the price. It actually drops with heavy momentum to the downside. Then you are surprised what is really going on. So usually when you see such a event happening, it is what we call ignored accumulation. The price is ignored to cover this accumulation. So what happens most of the time is that the price fails to break into compression. Once there is no break into compression, then mostly this is what happens. But usually when there's a break into compression, usually the price fulfills its mission, going to the northern east kingdom. Then finally it covers the whole accumulation. But sometimes if you see the price struggling to break into compression, then usually the price drops going to a certain decision point, going to the southeastern kingdom here. So you need to look for such setups, and when they okay, wait for the price to come back. And there should be an MPL here or a QM level as the price returns here. That's only way you can be able to place your trade, because those who have watched the compression combined with the liquidity video, you will see that this might be a price approaching to a certain decision point. So usually what happens is that when the price comes here, it might come and have a challenge to break this, but finally once it breaks into compression, then it covers this gap and comes to the beginning of the movement. So what you need to look for, we need a decision point here to do a job for us to hold the price. Okay, so once you don't have a valid decision point here with an MPL or a QM level or a WMRU, then you should not take a trade here on the first time back. So to actually make your trade much stronger, you can wait for a PA here. The price should approach this MPL or this QM level in the form of a 3 drive. It might be a 3 drive, it might be a compression, it might be a fake out, all those things, guys. It makes this it avoids some scenarios of price going to cover the compression zone. So yeah, guys, we need a decision point here, then you sell on the first time back. And also, guys, there are some characteristics of a good supply zone and good demand zone. In this case, as you'll be looking for some selling opportunities, so it means this is our supply zone. So when the price comes here, you may investigate the nature of this supply. So the supply should be fresh. The supply should be fresh, and it should go down with the heavy momentum, all such kind of things, guys. And the time taken in formulating that supply actually matters, because once the price takes a lot of time creating that decision point, it may weaken it. So there are some characteristics of supply and demand. However, we are not going to include them in this course, but just for your bonus, you need also to take that into consideration. So what may happen here is that the price tries to go down, but comes back and makes a spike here. So once a spike is made here, then the price drops. It means that decision point is no longer fresh. So those are some of the characteristics that you can look at in order for you to validate whether a decision point is significant or not, because not all decision points can be traded. You need to evaluate the strength of that zone and convince yourself that that zone is more likely to hold the price. But if you see that that zone meets the characteristic of a weak zone, then you cannot be able to trade that formation that we have occurred. So you need a very good judgment and a very critical analysis to validate the strength or weakness of a particular zone. So the idea behind trading this setup, you should put your stop loss just above the MPL in which the price is reacting to, and your target profit should be the depth of the movement. As the price came here to the southeastern kingdom, as the price is returning to the northern kingdom here, then before going there, this will be your target profit, guys. This will be your target profit. So yeah, guys, that's the anatomy of the ignored accumulation. So let's go to the terms and conditions for a sell setup. So there should be accumulation, as I have alluded before. There should be an MPL at the end of compression or any valid decision point. So as I have said, that there should be an MPL here at the end of this compression, and the price fails to cover the compression zone, and the price drops with the heavy momentum, with the liquidity going down, then the price makes a first time back. That's where you can be able to place your trade. The accumulation should be ignored and the price continue dropping with strong momentum. Entry: place a trade on first time back. Stop loss, the stop loss should be above the MPL. Target profit should be at the lower low before FTP. before the first time back. So we have explained all these guys. So the problem with human beings is that they don't want to keep the rules. They don't want to keep the rules. They want to create their own rules. And as far as history is concerned, the moment human beings fail to keep the rules, they suffer a lot. They suffer a lot. So guys, rules need to be kept. Don't break the rules. Follow your rules. Create your own trading plan. Follow it through thick and thin. Even if it's having a drawdown that week, don't stop following your trade. Rules are there to protect us, so they need to be kept. So let's go to some chart examples. So guys, here we are on crash 500 index H1. As you can see guys, that here there was accumulation that occurred here. So as the price accumulated here, you can see guys, as I have alluded before when I explained the compression video tutorial, you saw that we have various ways that we can use for us to be able to determine whether this is a valid compression or not. So we can be able to use order blocks, and I talked about how to calculate the 45-degree angle or such kind of analogy as far as measuring or defining compression. So all those are strategies that you can be able to use to define compression. So compression and accumulation, they are almost the same thing, even though they are different. But in this course, we assume that they are the same. They are like twins. So guys, once you see that there's a compression that is happening there, so you can see guys, the price was compressing here, but now what happens is that the price just shot up to the top, and as the price was going towards the northeast side, with the heavy momentum, with liquidity going to the upside. So once we see this condition, then we wait for the price to come back to this zone where the compression, where we were expecting the compression to be covered. So here guys, you can see that on the nature of price, it comes to our buying zone. There was an MPL here. So once we have an MPL, then we can be able to place your trade. But however, it depends with your rules on this one. I'm not saying that you should be very strict on the approach, because sometimes some people may prefer that there should be an approach, whether they want to see a 3D or it's a compression towards the buying zone, or it's a fake out. So all those things, you can be able to consider them in order for you to make a decision to buy or not to buy at that zone. So guys, you can see that when the price was coming to the downside, it actually came with the heavy momentum. So, but fortunately enough, because we have an MPL here, the price was able to was held, and we see that we were able to hit our target profit, and you put your stop loss just above, just below the MPL. So yeah guys, this is example number 1. Let's go to example number 2. So here in example number 2, we are on volatility 10 index M30. So guys, as you can see that there was an accumulation here. The price accumulated, and you can see even in the movement of price, it was not a heavy movement. So the price starts with a slow movement. Then suddenly the price just shoots up with the liquidity going to the northern kingdom. So as the price came here to the northern kingdom, you can see that the price started to drop, going to a decision point where we expected breaking to compression to cover the compression zone. So that's where you put your buying zone here. So fortunately enough, the price came to this zone and the price was able to go up and it was able to hit our target profit here. So there was a kind of a three drive, guys. If you check, there was a kind of a three drive approach here. So those who may want to trade this standard operating procedure, wanting to consider a valid standard operating procedure, then this one should have been your trade, because there was a three drive, even if the three drive was TP, but however there was a three drive here, guys. So you may have profited from this trade. It depends with your rules, guys. It depends with your rules. If you just want to trade it as it is on the first time back, it's up to you. If you want to wait for an approach, then it's good as well, guys. The market needs discipline. You just need to follow your rules. Follow your rules. I know human beings don't want to follow their rules, but you need to follow your rules, guys. Don't break your rules. You'll be doing injustice to yourself. You'll be killing yourself. Trade with your plan through thick and thin. So yeah, guys, so you put your stop loss just below here, and that's it on example number 2. So let's go to example number 3. So here in example number 3, we are on volatility 10 index M30. So this is what happened, guys. You can see that there was an accumulation here that occurred here. The price was having a smaller, a weaker movement, or a slow movement to the downside, but suddenly the price just changed and it dropped with the heavy momentum. Instead of it covering this accumulation, the price dropped. So as I have alluded before, that once you see that the price is struggling here to break into compression, then usually what happens is that the price will drop down, going down. Then when the price dropped here to the southern kingdom, you can see that the price started to slow down, coming to the MPL. And you can see, guys, this kind of a shift in momentum, guys. As you can see, the movement was very fast going to the downside, but when it approached the MPL, the price actually slowed a little bit. And you can see here, guys, that the price actually approached the MPL in the form of a 3 drive here, guys. And you take your trade here and you put your stop loss just above the MPL in which the price is reacting to. Although the 3D was steepy, but it was a 3D, guys. It was a 3D. And you may have taken this trade, and your target profit should be here. Unfortunately, your target profit was not hit on this trade. So I don't know, maybe the price would have came back again and took you out. I don't know what you would have done here, considering your trade management. So yeah, guys, this is another example that we have. Let's go to example number 4. So here we are on volatility 25 index M30. As you can see, guys, there was a kind of an accumulation here. The price was accumulating to the downside, and suddenly the price just dropped with the heavy liquidity going to the southeastern kingdom here. And you can see that the price came again with momentum, and as the price was approaching the MPL, we can see that there was a slow movement in price, giving you an indication that we are about to land. As you know, guys, an aeroplane, when it's landing, they reduce their speed. They don't just land with full speed, guys. The same applies in Forex. You need to wait for the price to slow down. Price should slow down, giving an indication that we are about to land here, guys. So that's what you need to look for. That's simply what the price approaching is. The price should slow down as it comes to the MPL area. And this is what happened, guys. And we had a 3 drive here that occurred. And finally, the price was able to drop and came to hit our conservative target profit here, and you put your stop loss just above the MPL in which the price is reacting to. Here we are on example number 5. We are on volatility 25 1x index on M15. As you can see, guys, here, this is not a perfect example though. It's not a perfect example. I should not have taken this trade, but for the sake of learning, let's just look at this example. So as you can see, guys, that there was a kind of an accumulation here as the price was going to the upside. This demand was taken out by this one was taken out by this one. There was a compression actually occurring here, or an accumulation that was occurring here. And finally the price failed to break into a compression, and you can see the liquidity of price. This went up to the northern kingdom, and you can see, guys, that as the price dropped down going to the decision point, then the price was able to respect that decision point and went up. And you can see, guys, this was a double maru that was able to hold the price here, and the price finally went and hit our conservative target profit, and you would put your stop loss just below the decision point. So guys, that's it for ignored accumulation. I hope you have learned something from it. So guys, we have two types of traders here. We have aggressive traders here that do not wait for the approach or the price approaching here, whether it's a 3D or it's a fake out or a what. They just wait for the first time back, but they keep the rules. These guys, they keep the rules, but they are just aggressive in the sense that they wait for an accumulation or a compression to occur. Then suddenly there is a heavy movement of price with liquidity going to the upside. Then they wait for the price to approach a MPL or a decision point that is valid. Then they take a trade from there without a PA. So it depends, guys. Then we have some conservative traders who want to see a PA, a price approaching here before they place a trade. So guys, on this one, it depends on what you want. If you want to check for a PA before trading it, then it's it. As long as you are keeping your rules. You need to keep your rules, guys. If you keep your rules, then I can assure you that you can make it in this forex market. So even if things are not working well for you, keep the rules, guys. Rules need to be kept to protect you. You need rules for your own protection. So yeah, guys, it depends with what you want from there. So guys, that's it on the ignored accumulation. So guys, don't forget to like, share, and subscribe to our YouTube channel, as we are coming to the end of this course, and I'm hoping, guys, that you are learning something every time we upload a video. Guys, those who want to join our community, you can join our Telegram channel so that you can be part of the Chartmaster FX community. On our Telegram channel, people will be posting their flashcards there, and there are some homeworks there that I post. So if you want to be part of that team, you can join us, and you will see that your trading is going to improve, because you also getting some ideas from other traders who have actually finished this course. So yeah, guys, it's your boy Chartmaster signing out.